Hey everyone, how do you find targets when you trade or when you invest? Now that's a $1 million question, which a lot of you have asking me in the last few months in my YouTube or on my Twitter, and I've been asking how do you derive targets in stocks? What do you mean when you say 5 times the risk, 8 times the risk? Now this is the most important concept in trading because without this, it's going to be difficult to find an edge and to assess how are you actually performing. So that's why we're going to deep dive today. I'm going to look at first how do you define a stop loss, and when you define a stop loss, how much do you buy, and after you define a stop loss and when you're buying, what should be the targets that you should look forward to. Okay, so I'm sure you're going to like this video. Don't forget to stay till the end because this is the most important concept of trading and you need to get it 100% right. Okay, so let's start. So first let's look at the stop loss. Now the smaller the stop loss, the bigger the position size and reward. What does it actually mean? Now let's say you have an account or you have 1 lakh to trade and invest in markets. Now that's the total money you have. Let's assume that is the amount that you have. Now you need to risk certain amount in the market because you need to make money. Right now, there is uncertainty in the markets, and when there's uncertainty, you do not know actually which side the trade will go. So you need to always define your risk. Now, that risk we're going to define is always going to be 1% or 2% on your overall capital that you have. So by 1%, it means 1,000 rupees or maximum 2,000 rupees in a stock is what you're going to risk. Okay, now let's keep that simple and let's say 1% is what you're going to risk. So 1,000 rupees is what you're going to risk in a single stock. Now by risk, I mean when you invest a certain amount of capital, the maximum you can lose is 1,000. Now you can invest the entire 1 lakh, or you can invest 50,000, or you can invest 20,000. But at the maximum, you lose 1,000 rupees. Now that's the risk that you're going to define. Now let's say you are entering a stock which is at 100 rupees, and your stop loss is let's say 90. Now the stop loss comes to 10%, right? And your stop loss in terms of points is 10 points. Okay. Now how do you define how much to buy? Now if your stop loss is 10%, and if you're going to lose maximum 1,000 rupees, and that's what you define. You define maximum you want to lose 1,000 rupees. Now, if I'm going to lose 1,000 rupees, and if my stop loss is 10 points, so what I'm going to do here is divide the risk amount that we defined here by the stop loss value. Okay, so here in this case, the stop loss is 10 points. So I'm going to divide 1,000, which is the risk amount, and divide that by 10, which is the stop loss. Right? Stop loss value is nothing but the entry minus the stop loss. Now, when you divide these two, you're going to get 100 shares. Now, if I am going to risk 1,000 rupees and if my stop loss is 10 points, I can buy a maximum of 100 shares, right? So basically, if I buy 100 shares at 100 rupees, which is going to be total buy is going to be 10,000 rupees. And if this 10,000 goes down to 90, right? Which means I'm going to lose 10 points and I have 100 shares, which means I'm going to lose 1,000 rupees. Now, in case the stock goes up 10%, right? Now, net to net, you bought 10,000 worth shares. And in case the stock goes up 10%, you're going to make 1,000 rupees, and your overall portfolio as a whole is going to go up 1%. So your 1 lakh capital is going to now become 1 lakh 1,000 rupees, right? Now that's considering a 10% stop. Now the point of discussion in this video that I started off with is 10% a good stop? For some, yes. For some, for short-term traders, no, it's not really a good stop because if you now, let's say you had two setups. One is setup is with a stop loss of 10%. One setup is with a stop loss of 5% here. Now in the same case, I'm going to discuss if a stock has a stop loss of 5% and if you apply the same concept, 1,000 rupees risk, my stop loss is just 5 points, then you can buy 200 shares, right? So in example 1, you could have bought only 100 shares, but in example 2, you could have bought 200 shares. But the risk in both are exactly the same. 1,000 rupees. So you will lose here 1,000 rupees because the stop loss hits 95, you will be out. And if it goes to 90, you're out here as well. So with the same stop loss, with the same risk amount, I'm taking a higher position size in example 2. So here in this case, I'm going to buy 200 shares and 200 into 100, which is entry, is going to be 20,000 rupees. So here I'm taking a position size of 20% of my overall portfolio, right? Now by taking 20%, what I'm basically doing is, if a stock goes up 10% here, I'm making 2,000 rupees and my capital is up 2% compared to the 1% that we had. So ultimately what you have to define is, let's say you have two stocks always, one is a 20% risk return stop loss and one is 10% stop loss, then you need to obviously go 10% because the probability of your account, your entire capital moving up higher is much faster and is better when your stop loss is lower. So ultimately in trading, what you have to always do is you have to find low risk setups. By low risk, the lower the risk, the much higher the returns you're going to get, and the much and more faster your account will compound. And that's has to be your ultimate goal in trading. So your ultimate goal in trading and investing is to take a decent position size. Somewhere 20%, 25% is what you need to target. And that's when you will reach probably a very good trader. And with a 25% position size, if you can make 20% return, your portfolio is up 5%, right? And you don't have to catch 10x, 20x, 30x. So if you're going to invest in a stock, if you're going to invest just, let's say you have 1 lakh capital, and if you're going to just invest 1,000 rupees in a stock and the 1,000 rupees goes up 100%, you're just going to make another 1,000 rupees. So it doesn't really make sense. So I wanted to drive this concept before we jump into how to find targets. Okay, so I hope that's clear. If you do have any questions, let me know in the comments. But now let's jump in to see how do you find targets now that you have defined your stop loss, right? So the first example is X times or N times the risk. Now this is a fixed reward or fixed target example depending on your stop loss. Now we discussed in the previous example, stop loss can be 10%, and here we're going to say, okay, I want just 20% return. I want just 30% return. We're going to keep the target fixed. Now the target comes based on a stop loss. Now let's take an example. Now first, the rule is when you have a chart, you need to first find a swing low on daily charts. Now here I've taken the example of HEG, which I released the video on Sunday. So I'm taking the example of HEG, and here I'm going to find the swing low on the daily charts. The swing low here in this daily chart is around 956. So I made a note here. So this is 956 is swing low, and you need to round up your stop loss to the nearest whole number. In this case, it's going to be 950. Okay, the rounding down should be below, not up, not to the ceiling, but to the floor, right? So if 956, your nearest round number below is 950. So keep your stop loss to 950, and then you need to calculate what is your difference between your entry and stop loss, right? Now entry here is the current market price, which is 1055, and the stop loss is 950. So in terms of the absolute amount, you're having 10% stop loss or around 105 points of stop loss. Okay, now let's keep it simple. Let's say 10%. Your stop loss is 10%. So what we did, we first found the swing low, then we found the stop loss by rounding up the number to the lowest round number below, and now we're finding a stop loss. The stop loss is 10% from the current market price. Now once you find the 10%, your next rule is to find a target. Now the first example here in terms of finding targets is X times or N times your stop loss. Now if your stop loss is 10%, your targets can be 20%, or 30% or 40% or even 50%. Now in the case of HEG that I discussed last week Sunday, this week Sunday, the target is somewhere around 8 to 10 times the stop loss that we had, right? Now you can also do that kind of a number, but if you're going to have X times the risk, then try to keep it around 2 to 3 times or even 5 times the risk that you want, however you want. It's totally up to you. Now once you define that, you can also there's a tool available in TradingView. You can click on this here, take this long position and try to do this like what I did. So this red is going to be our stop loss and the green is going to be a reward. Now here in this example, if you see here, it is 3 times the risk reward, right? So I've fixed the target to 3 times the risk reward, and that comes to the previous recent resistance, right? So that comes to that level. So once it comes to 3 times the risk reward, you can book profits, or you can take half profits, or you can also sell the entire position. But you can also, partially book around 2%, twice the risk, or you can fully book around 3 times the risk, however you want to do it. Now, some tips on how you can, have greater risk rewards here. First is find a major breakout or major reversals on charts, long-term charts, right? When I say long-term charts, it needs to be at least 6 months, 1 year consolidation, 3 years consolidation, 5 years consolidation, like that. All right. And then if you want to really find a low risk stop loss, and if you want to really have a good risk reward, go to hourly charts and find a stop loss. Like for example, if this was hourly chart, then my stop loss would be around swing low, or you can even keep it around this zone here because the stock has now reversed with good volume. So you can also consider that as a stop loss here. So the lower the risk, you're going to have a bigger position size and you're going to take a bigger target, and your account would be up even faster. Don't forget the previous example we discussed in the first slide. Okay. And as a rule, you can also book at 3 times the risk and trail the remaining position that you have using a simple moving average. So that's the first example I want to discuss. How do you take targets at X times the stop loss or X times the risk? Okay, so that's the first one. Let's move on to the second one. Now in the first example, the target is very fixed, right? 2 times or 3 times the risk. But why controlled reward? Because markets sometimes, if they're really good, they can give you great rewards, and sometimes you can even get 10 to 20 times your risk, and that is completely depends on you and how you trade, right? So if you don't want to control the reward, this is how you should trade, find targets, like I'm going to discuss now. So first is, as always, find the swing low on the daily charts. Now here I have the weekly charts with me, but on the daily charts, you need to find the swing low and try to define a stop loss always on daily charts. Okay, that's the first step. Once you define the swing low, also define a stop loss by rounding it below to the nearest round number below that current market price, or the stop loss that you find, or the swing low that you identified. So once you define these two, then calculate the difference between the entry point and the stop loss. For example, if your entry point in HEG was 1055, the stop loss is 950, you're going to have 105 as your overall stop loss, or 10% of the stop loss. Now next is to find the nearest resistances on the weekly charts. Now in this case, the nearest resistance is 1400. Now the stock was trading at 1055. The first resistance towards your left hand side of the chart is going to be your first target on the weekly charts. Now do not fixate to daily charts, because daily charts might have more noise than weekly charts. That's why always fix targets on the weekly charts, because when a stock reverses, it's obviously going to face a lot of resistance around the weekly charts than on the daily charts. So unless the stock reaches there, you can ride the trend, or even hold on until the stock reaches this point. So find the nearest resistance on the weekly charts on the left hand side. This is the left hand side of the price, and then you find the nearest round number. Now in this case, the zone here is 1400. Now with the entry price of 1055, with a stop loss of 950, if you're going to target is going to be 1400, then you're going to take 3.5 times the risk reward. Right now, that's a excellent risk reward in terms of trading or investing. And if you want more targets, then you just go to the previous swing low. You can also previous resistance on the weekly. You can also find this one, but I'm going to look at major zones. Now this is a major resistance zone, which is 2500, 2600. If I round off the nearest round number. Now this is 14.5 times the risk that you're going to take. Now what are the chances of this stock heading here? Right now, this is, if you look at the stock that I covered this week, Sunday, this is retest of this major support zone. So for me, as a positional trader, as an investor, I would definitely look at this as a target for me, because this is a complete retest, and the chances of this stock heading here is much higher, because I'm looking at this just as a breakout retest, which means the uptrend is still on, and also it is retesting the primary trend line. So overall, I would look for much higher targets, which is around 2500, 2600, right? Now, that's the second technique. Find the nearest resistances on the weekly chart and take that as a target, and then calculate your risk reward times, right? So these are two techniques. There's also a third technique, which is, what if the stock doesn't have any resistance nearby, and what if the stock is trading at an all-time high? Now that's for another video, and I'll discuss this definitely in another video. And if you do want me to discuss this, do let me know in the comments, and do let me know what you think about these target techniques that I've taught you. Okay, so that's it for today. If you did like my video, don't forget to subscribe to my channel, and don't forget to like this video, and don't forget to share it with your friends as well. So I'll leave you here. Take care, stay safe, and trade safe until I see you in another video. Bye bye.